Last week, markets popped to the upside. Incredible run at the end of the week. But why? How close are we to the edge? And what made the market run up? Let's dive in. I'm your wealth guy. Let's talk money. Let's talk Sunday market preview. All right, everybody. So welcome back to the channel. I really hope you enjoyed today's content. But let's jump right in, because last week, in the early part of the week, we saw the markets move really very significantly to the upside. Very, very positive in terms of any bullish sentiment. Again, we had some wonderful earnings. But roughly Tuesday evening, Wednesday, you started to see that momentum start to wane. And the markets actually turned red for the next 2 days. And even on Friday morning, we were down roughly 353 points, or at least the futures were getting ready for the open. And once they opened, the markets continued to fall to the red. The big thing we note, which I've mentioned many times here, is the 10-year yield, and the sell-off in the bond market was again very significant for another day in a row, which means that we are getting very close to that cliff in the bond market. And remember, the equities market is a derivative of the bond market. The bond market is also many times larger than the equities market overall. But what really happened? What happened midday Friday, or late morning on Friday, that triggered the market to really turn around and move, finishing the day roughly 858 points, I think it's off the top of my head, on Friday, at least the Dow. Well, let's talk about Fed President Daly, Mary Daly. She came out and gave the suggestion that maybe we should start expecting the markets or the Fed to start relaxing on their increases. But here's what actually was said. It should be at least something we're considering at this point, but the data haven't been cooperating. So why come out and suggest anything at all? Why create this hope that something is going to happen sooner than later? You see, the markets have already priced in the fact that in November, we're going to see a 75 basis increase. But she continues, we might find ourselves, and the markets have certainly priced this in, that's the 75 basis points, with another 75-point increase. But I would really recommend people don't take away as it's 75 forever. Well, of course not. First of all, let's be honest here. None of this is really anti-inflationary. It's not fighting inflation the way that they would like us to believe that it is. In fact, if we take a look at September's numbers, and yes, it is delayed, we know that inflation has actually gone up. It's an uptick. But here's where she continues. She reiterated that recent central bank forecasts showing rates rise next year to as high as 5% and then pausing were still very good indication of where things are looking. Again, so why mention anything now with creating this possibility that something may actually happen this year? At least that's the illusion. You see, we also have another individual, Nick, the Fed Whisperer. And I'm not going to dive too much into this individual, but if you do want to know more about it, check out Gregory Manorino's recent video. And again, the video he posted on Friday afternoon, his market wrap-up. He does talk about Nick, the Fed Whisperer, quite a bit. Now, I will warn you, Gregory is not necessarily everybody's cup of tea, but the information he presents is very solid, and I am very much in agreement with much of what he has to say. And anyways, so Nick, the Fed Whisperer, hinted that there might be a possibility, remember, this is the Fed Whisperer, might be the possibility that we're going to experience a pivot by the Fed in December. Now, I am going to say this. Most analysts expect that there will be some kind of pivot in the roughly near future, but most are thinking late end Q1 into Q2 for 2023. I have to admit, earlier in the summer, I expected a Fed possible pivot for October. However, I was anticipating that would be an impact due to the midterm elections that are coming up. Now, that being said, Kashkari came out and said that he's essentially expecting the Fed to maintain status quo, because you got to keep fighting that inflation, because these incremental interest rate increases are fighting inflation. Let's be honest. Everything that the Fed is trying to do right now is anti-fighting inflation. Everything the Fed is doing is inflationary. These moderate or slight increases, 75 basis points, sure, they're really fighting inflation hard. In fact, September saw inflation jump up again. I anticipate we're probably going to see that happen again. And even if we see a leveling off of inflation, there are a number of external factors that are playing into that. Now, keep in mind, we are going into the winter where we can anticipate, and I've mentioned this before, certain commodities, such as crude, natural gas, will start to creep up again in the winter, causing inflationary numbers to increase. But we'll talk about that on another day. For today, we just want to focus on the 10-year yield and what happened last week and what we can almost expect. But let's cover a few more articles. We won't even dive into them. We'll just talk about what some of the major institutions are warning. BNN Bloomberg. Here in Canada, the bond market sees no end to the worst turbulence since the credit crash 21 hours ago. 9 days ago, Bank of America is worried about the bond market volatility and says the risk of a crash is rising. That's CNBC. Bond market plunge means new lows for stocks is not in yet. Bank of America. That was about 29 days ago. But why don't we bring it back closer? 26 days ago, the bond market crash foreshadows new lows for the stock market. Again, another Bank of America warning. That's on top of JP Morgan warning us last week as well, the same issue. So what's happening here exactly? Well, we can see that central banks are starting to panic. We saw that in the UK, with the UK starting their QE only 2 weeks ago and then stopping, or supposedly stopping. We saw Janet Yellen from the treasuries head over to the banks and ask them whether or not they should start buying bonds. There is serious concern here by central bankers around the world and even financial institutions at where this market could fall if there's no stabilization in the debt market. So much so that it's interesting. Every time we run into some serious sell-off in the bond market and yields start to spike, some kind of miracle happens and the market's correct or calm, at least for the short term. Now, again, we saw a massive run-up around a 1,400 point swing on Friday in the Dow. Will that continue next week? Well, for next week, here's what I'm going to expect. If we see a continuation of this positive momentum on Monday and carry forward into Tuesday, we can almost expect that there might be some positive continuation or a bullish swing here. Is it going to be long lasting? I don't think it will be. I think this will be a very short-term run as the reality of the numbers set back in. This week is a lot of busy numbers being reported towards the end of the week. We have GDP, Canadian numbers being reported, housing numbers being reported. It's going to be a busy end to the week. And specifically, we're talking about Thursday. Let's see what happens there. But we are also in the midst of earnings. So we have some very, very big numbers coming out next week, or anticipated numbers. And just to give you an idea, we've got 3M, Coca-Cola, GM, UPS. We've got Boeing, Meta, Ford, McDonald's, Caterpillar, Amazon, Shopify. Some very, very big names. Friday, we've got Chevron. So some big names being reported, and those are just a few. So we can certainly anticipate that there's going to be some more volatility, most likely to the upside, because let's face it, these numbers generally are manipulated because they overshoot, and that way they undershoot, so that when they come in, it's always better than expected and the markets move up. But this week will be telling us to where the markets are heading. Even if the markets do go up, I don't anticipate that this is going to be a long run. I think it's going to be a very similar run like we saw in the middle of the summer, where we will see a little bit of a push here before the truth and reality sets back in without a major intervention, and the markets will pull back down potentially to new lows. But that's it, everybody. I will see you tomorrow morning at the opening bell. And don't forget to check out Greg Manarino. I've got no direct contact with him or connection, but he does have a wealth of information, and I think you'd really appreciate what he has to say. All right, everybody. See you in the morning.